something important just happened in the Russell 2000. And in case you don't know, the Russell 2000 is a stock market index that tracks 2,000 small cap companies in the United States. Here's what is important about them. These are smaller, more economically sensitive businesses. So the index acts as a real-time barometer for real economy, credit conditions, and liquidity. So here's what it just did. It just pressed into its major multi-year resistance zone for the first time in almost 3 years. And it did it while the PMI and the business cycle is still in contraction. So now this is a show of strength before the business cycle turns. And therefore it might be a first hint that liquidity is quietly shifting. So if you are paying attention to PMI, to liquidity, to the broader macro cycle right now, the Russell might be one of the clearest early indicators that we have for crypto, and I'm going to explain why. This is happening in the small caps, where the real economy lives. And today I want to show you why that matters, and why the Russell 2000 might be telling us something big about the next crypto move. And before we dive into all of this data, I want to give credit to somebody. There's really been only one person in the crypto space that I've seen that has consistently been talking about the Russell 2000, and that's Blockchain Backer. He posted something back in August saying the altcoin market behaves like a high beta version of the Russell. Now, his approach through his videos and content has actually really caught my attention, and I've been keeping an eye on the Russell 2000. As of right now, as I record this video, I don't know what his latest view is on the Russell 2000 as it relates to crypto, but his recent content has definitely stuck with me in terms of at least one data point. And right now, I'm especially watching the Russell 2000 alongside PMI, M2, the liquidity frameworks, everything that I've been covering in my recent videos. And the connection is absolutely very strong. And for a nice visualization, I want to take a really quick clip from one of Blockchain Backer's videos.
Here in the candlesticks right over here, this is actually Bitcoin. In these blues and purples in here, you have the Dow Jones, S&P, and the NASDAQ. Down in here in the reds, well, your green is going to be your Russell 2000 and your red is going to be the altcoin market. Do you notice anything in here? And it's just very clear as day to me that we've had Bitcoin's price action behaving like the mega caps, just like we saw over there in the stock market, right? Your Nvidias, Apple's, Microsoft's, Facebook, Google, and then your altcoins acting like the rest of the market, where this whole market's been propped up by just a handful of names in the equity markets, and this market's been propped up by Bitcoin, right? It's that same type of dynamic.
So what's the point here? Why even look at the Russell 2000? It's simple. The real economy, the part that fuels credit conditions and liquidity, that lives in small caps, like altcoins, like the Russell 2000. Small cap companies in the Russell 2000 don't have the massive cash reserves or cheap borrowing access that the large caps do. They rely heavily on loans, credit lines, and really the cost of capital. So when we think of things like quantitative tightening that I've been talking a lot about lately, years of tightening, when financial conditions tighten, when rates rise, when liquidity is draining from the system for years, small caps are the first to get hit. So here's the powerful part about that. What happens when liquidity comes back? Well, it's pretty simple. Small caps recover well, especially after years of consolidation. And here's the thing, crypto behaves the same way. Crypto is a liquidity sensitive asset. It doesn't generate cash flow. It doesn't pay dividends. It thrives very simply when money is flowing, not when credit is tight. So when liquidity expands, crypto reacts even faster. And this is why the Russell 2000 and crypto often move together. They're both high beta expressions of liquidity. They both respond early and they both front run the rest of the market. And when it happens, they can very well both outperform the rest of the market. So there are so many different perspectives and ways to try and figure out which way is crypto headed, or even understand where crypto could be headed. But the Russell and PMI might be the cleanest signals. So I want to talk a little bit about why the Russell 2000 matters. The Russell 2000 is basically like the truth serum of the market. And we're really getting into the dynamics of how markets work. Small caps rely on real consumer demand, real borrowing costs, real credit conditions, real liquidity. However, when the economy loosens, small caps take off. So while everyone's watching Apple, Nvidia, Microsoft, like the bigger picture story with all of the large caps, the Russell is quietly showing us what the actual liquidity cycle is doing. And if you think about it and you look at this monthly chart of the Russell, for the first time in 3 years, it is absolutely pressing into its multi-year resistance levels. And that's fine from a technical analysis perspective, but while it does this, PMI is sitting in its classic bottoming zone around 48. This is a combination that needs to be paid attention to, especially when we know crypto, and the Russell 2000's correlation. Here's the part that gets a little crazy. If you zoom out on the monthly chart, like way out, you notice this. The Russell 2000 tracks ridiculously with the PMI cycle. PMI peaks, Russell peaks. PMI rolls over, Russell rolls over. PMI bottoms, Russell bases. PMI moves back above 50, Russell explodes. This happened in 1991, 2003, 2010, 2016, 2020. And here's another factor that is so important. As you watch altcoins, we don't have that much data. Russell 2000 does. And every single time that sequence marked the start of a new expansion cycle. Right now, the Russell is doing something structurally bullish before PMI has fully turned up. And that's the early cycle behavior. So now this is where crypto comes in. Crypto behaves like a small cap asset, driven by liquidity, extremely sensitive to PMI and credit conditions. We can think about it like this: Russell hanging out, basing, crypto stabilizing. PMI bottoming is a crypto accumulation type of era. Russell breakout, coin explosion. Crypto is basically the Russell 2000 on leverage. This is why blockchain backer called altcoins a high beta play on the Russell. I mean, if you just look at the charts and you look at the data, it's true. Crypto reacts faster. It reacts more explosively. And we're in the setup for that environment once again. So what exactly is that setup? Well, right now, Russell is pressing the 3-year resistance. PMI is bottoming under 50. Quantitative tightening ending in December. We're days away. TGA likely to fall, as we've noted in previous videos, and M2 is preparing its move. With the level of fear that we're seeing in the market right now, and with this exact combination happening right now that has basically triggered broad risk on rotations in every expansion cycle since the 1980s, it's hard not to pay attention. Is it guaranteed? Of course not. You guys know I'm always saying this whole thing could all go to zero. We have to manage our risk carefully. But if you strictly look at just the data, this is the moment in the cycle where liquidity stops draining, PMI bottoms, and small caps and crypto, they begin to move. And while we think about all this data and we try to prepare for what could happen next, I want to really highlight nothing is guaranteed. PMI, it could drag on longer. The Fed might all of a sudden change its stance and we could just see the Fed tighten for longer. Small caps could just continue getting rejected at resistance again and again. I do want to present the data to you. The combination of PMI, liquidity, and small cap structure, it's one of the most important signals probably to watch right now. So here's the takeaway. If you only watch the S&P 500, you're watching the wrong market, especially as we track what the business cycle is doing. PMI is where the macro cycle reveals itself, and crypto and altcoins, they react to liquidity faster than most other assets. The Russell is doing something it hasn't done in years. And if we get a repeat of what has happened previously, this could be the early signal for a big crypto move. And while yes, we prepare for every single scenario, the question I have for you and myself is, are we prepared for that scenario? Thanks for watching, everybody. If you enjoyed this content, please consider giving it a like, hit that subscribe if you're not a subscriber. And once again, please feel free to get into our intelligence system, click the link below, get a free trial, just cancel before the free trial is over if you don't like it. But check out our risk models, our exit planners, the on-chain metrics, chat with our autonomous AI that's trained on our entire system, as well as your strategies that you have set back there. Try it out. Let us know what you think. Join our members. I appreciate all of you for watching. I'll see you in the next video. God bless.